Good afternoon all. We'll just give it a minute or two to let people in and then we'll make a start. I think we'll make a start. We still have some people joining, but whilst we do the introductions, we can get going. So good afternoon, everyone. I'm Olivia Powis. I'm UK Director at the Carbon Capture and Storage Association. That's a trade association representing industries and members right across the value chain of carbon capture. Welcome to our webinar. It's in association with Net Zero Week 2023, entitled The Pathway for CCUS to 2030 and Beyond. We're delighted to see such high level of interest in this webinar. We've still got people joining now, and I think we've got over 500 registered. So really hope for some good interaction and questions. Just a few participation rules before we make a start. So if all attendees could remain muted and with their camera off during the presentations. The webinar will be recorded and slides and recording will be circulated to all participants afterwards and available on the CCSA website. All questions to be taken at the end during the Q&A, but please do post them in the chat as we go so we don't miss them. And we can have two types of questions, so written directly into the chat and I'll ask the question, or I'll come to you to unmute and put your camera on and ask the question. But also, I think we're all familiar now, but raise the hand. You've got the hand function in Teams if you want to ask a question directly, and then I'll come to you and ask you to unmute, turn on your video and put forward your question. So a little bit about the context for this webinar. It provides an opportunity to hear from a number of carbon capture, utilisation and storage cluster proposals around the UK, as well as an overview of the recent North Sea Transition Alliance CO2 storage licensing round and next steps for CCUS to 2030 and beyond. We may have audience and participants who are less familiar with CCUS, so just a little bit of background that carbon capture, utilisation and storage is an essential tool in reaching net zero, and for many industries it's the only route to decarbonisation. So today we're going to hear from a number of clusters who are representing areas of the UK where there are groups of industries looking to use CCUS and hydrogen to decarbonise. We are delighted to be joined by the following speakers. You can see them with their cameras on. We have Joe Bagley, Principal Geologist from the NSTA, Paul Davies from 7CO2 cluster, John Egan from the Peak cluster, Martin Curry from Bacton Thames Net Zero cluster, Michael Foley from the low carbon the Solent cluster, sorry, and Jack Richards from Morecambe Net Zero cluster. So I think to remain on time at that point, I will stop and introduce my first speaker, Joe, who's Principal Geologist at the NSTA. Joe, if you would like to start by screen sharing the slides. Thank you.
Yeah, thank you, Olivia. Good afternoon, everyone. I'm just going to share my slides. Let's pick the right window. Yeah, so I'm just going to spend a few minutes talking through some of the sort of overview outcomes of the first carbon storage licensing round that was run by the NSTA. But first, I thought it might be helpful for us to put the sort of need for licensing in the sort of wider context of the sort of scale and pace that's required if we're to meet the sort of UK's targets for CO2 storage against the sort of carbon budget 6 scenarios. So just to kind of start looking at the chart at the sort of top left of the screen here. So the purple bars represent the sort of injection rates from the sort of 6 licenses, so the sort of existing projects that are currently licensed on the UKCS, and they're sort of shown with the sort of green license areas on the map to the right hand side. And what we can see in those instances is that under many of the CV6 scenarios, there's a sort of significant gap between the overall targets under most of those CB6 scenarios and the storage capacity that those projects could realise between now and 2050. The other thing to point out about the chart is that these purple bars are effectively an unrisked view of the injection rates associated with those projects. So if we also account for some kind of sort of discount rate, which allows for some projects to kind of ultimately not make it through or to kind of encounter issues once they get to the point of injection, that gap becomes even more stark. Further to that, we've been doing some analysis through some of the work that's been going on in the regional team here in the NSTA, looking at an estimate of the number of stores that need to be appraised by 2050 in order for the UK to meet its targets. And so the numbers that you can see shown sort of bracketed here look at take the balanced net zero scenario and also the sort of headwind scenario, and you can see from the numbers shown that there's it's a fairly broad range. It's quite a large number of stores that we think need to be licensed and appraised in order for the UK to get to the targets, but also accounting for the fact that some, not all of those stores will make it through to successful injection and beyond. So all of those observations effectively, plus, coupled with what we saw in terms of the high level of interest from industry when we kind of opened up the UK for nominations for carbon storage licensing, led the NSTA to launch its first carbon storage round in June 2022, the offers of award for which were announced in May this year. So the initial announcement was for 20 offers of award, but last week we were also able to announce an additional licence offer in the Southern North Sea. So the total number of licences that were awarded for offer as part of the round now stands at 21. So the map on the left-hand side of the slide here again shows the existing CS licenses in green, and then the areas in red which we've offered for award. We've offered for award areas in all of the licensed areas that we offered for application, and we've also sort of seen a really sort of diverse portfolio of stores that have been brought forward through those applications. So, and again, that's quite encouraging from when we look at the sort of uncertainties around carbon storage, having that sort of diversification in the portfolio, I think is really important, just because as we move forward, those stores get appraised and ultimately get to injection. We can start to kind of really understand the differences and uncertainties around some of the storage potential in the UKCS. Some of the projects that are being brought forward for licensing now are potentially also going to be injecting before 2030. So again, they're going to be playing a critical role in terms of helping to meet the government's targets and also the overall UK targets. Some of the sort of key success metrics that we've sort of looked at as part of the round outcome, you'll see here there's a number of sort of firm well tests, wells and or injectivity tests that have been offered, and some contingent activity associated with that too, and also some kind of firm seismic shoots and contingent activity. So again, from an overall sort of store appraisal perspective, that level of sort of committed activity is really positive from our perspective. I guess the other thing to say is that obviously, carbon storage is kind of one of the sort of key sectors for the UK as we move forward towards sort of net zero. And so our expectation is that licensees working in this space will effectively work really collaboratively with lots of other marine users from other sectors across the board. And so I just wanted to kind of sort of touch finally on something around the sort of license timeline. So at the top of the slide here, you can sort of see the sort of license timeline process that we're sort of coming to the very tail end of now. And then we start to see the sort of duration of the licenses that start with the appraisal term. So that's basically the period of time from license award through to permit application. The first few years of the appraisal terms, which are sort of overall are sort of typically 4 to 8 years in duration, tends to be focused on early risk assessment and also the sort of full and proper site characterisation of those stores. Ultimately, understanding, you know, the risk of leakage, understanding the store potential, injectivity, etc., and moving forward through to the assess phase where the sort of above ground evaluation becomes, you know, much more sort of front and centre, moving forward through to defined phase and storage permits application. In terms of the current ongoing licence process, we're sort of going through the final stages with licensees now in terms of getting to the point of licence acceptance. And once those have been fully executed, they'll be published on our website, as we've been doing with previous licences that have been awarded on the UKCS to date. We are intending to run sort of a feedback session on the first round. We recognise it's the first time that we've done this as a regulator, and we recognise there's probably some areas for improvement ourselves, and we're keen to hear from the companies who took part in terms of where they might sort of see us improving things for, you know, for future licensing activity as we move forward. And we do also tend to, you know, we do need to sort of test future industry interest for further licensing activity, because again, as we've seen from the earlier slides, there's still a lot to be done in terms of the appraisal of an appropriate number of stores to get to the net zero targets. Timing on that's sort of still to be decided, but it's an active discussion now in the NSTA as to when we next need to make the next tranche of acreage available for industry moving forward. And I can see Olivia's popped up, so I'm going to stop talking now. Thank you.
Have you finished, Joe? But you have.
I have. Thank you. Yeah, thanks.
All right. Thank you ever so much to Joe, and apologies for those pop-ups. We'll try and get those turned off whilst Paul is sharing his slides. So thank you very much, Joe, and we'll come back to you for when we go into questions. I'd now like to introduce our next speaker. So we have Paul Davies, who is Director of the 7 CO2 cluster. Paul, if you would like to begin screen sharing, and we'll still try and get these pop-ups off. Thank you.
Thanks. I'll just start without sharing screen for a second. But just coming after Joe, you're about to now hear from 2 clusters that haven't got their own stores, and then we're going to move on to the clusters who have got their own stores. So what I was going to do is give you a brief overview of 7 CO2, just for sort of interest in how that's working. But more relevant is, what are the challenges that we've got to make dispersed sites work and to feed in and ultimately deliver to those stores? And it's relevant effectively for all dispersed emitters around the country, because that's what eventually we need to do to decarbonise. So I'll canter through 7 CO2 and then really focus on the challenges from there. So I'm hoping you've now got the overview. 7 CO2 is basically focused on Bristol Port and Avonside, but there's a number of large emitters at the port, and then a number that can link by rail, and here are just some of these highlighted. But if I move down, that's the port on the left-hand side. Basically, there is space there for liquefaction and storage of CO2, and an existing pipeline that just runs up that coast about a kilometre or so to 2 million tonnes of emitters from energy from waste from Viridor, Suez, and SSE power plant. And basically, by installing carbon capture, liquefaction and storage and enabling shipping, it allows a large number of businesses to decarbonise in the southwest and even into South Wales. So like Viridor in Cardiff already rails its bottom ash around to Bristol. It could do the same with CO2. And what it means is, once that store is there, once those facilities are there, any large emitter can introduce CCS knowing they can rail or pipe their CO2 down or onward shipment. 7CO2 have got now MOUs from about 4 to 6 million tonnes of emitters saying they're interested in this happening, so that they could actually look at the port as their option for storage. And we've got land agreements with Bristol Port, basically for that storage site you can see on screen, and for the land, the development and rail. And there's also a large package of land we've got between the facilities for investment in new stuff like SAF or e-methanol and hydrogen. So we've now undergoing feasibility studies detailed on the storage, the pipeline and rail facilities. Just some headlines, and then I'll go through to the challenges. So the headlines, yes, we're doing the idea is to develop liquefaction and storage. That is the hub that enables all the business to invest. We're working on common design for rail transportation, so with Petrofac, but also VTG and GB Rail Freight, looking at what that would mean across the country. And the basic idea is if you have sufficient initial projects, that underpins investment in initial CO2 ships to one of the stores that you're going to hear from in a moment. We could, in theory, compete between stores, and the key issue is resilience. If a store's got an issue, we can move around. That's the importance of shipping. The message to government is a simple one, which it is clear that what we need is some early support for some projects, not all of them, enough to underpin the investment in the liquefaction and the shipping. But once that's established, it means all the emitters have the confidence that that infrastructure is in place and they can proceed. So that, in essence, is 7CO2. But I just wanted to talk about a few key challenges, and apologies for a slightly busy slide, but I'll try and deal with them, and what we're doing about it. So the first thing is there isn't enough data yet on the cost competitiveness of rail and shipping, but a lot of work going on with people on this call and elsewhere, certainly with feasibilities for 7CO2 hub and a number of work on shipping companies pricing up size, pressure, temperature, etc. of shipping, and demonstrating the resilience of a shipping and rail solution versus static pipelines. But the key message is, if you really want to know if it's cost competitive, ensure that it is available in Track 2, that those bids can demonstrate they're competitive relative to pipeline solutions. The second thing is making sure we've got the legal structure, that the legal structure for shipping and hubs fits into the CCS business models. And a long story short, what we've done under the CCSA non-pipeline transport group has submitted a ship charter and hub structure at a heads of terms level and a matrix to show how that would easily fit within the existing business models. And in particular, the relationship between the capturer and the store would remain unchanged, with all the cross-chain protections and regulatory protections in place. The third thing I'd say is the market does need to believe that dispersed sites will be encouraged in Track 2. And so with the CCSA, we're now just developing what we would recommend government would include in their bidding instructions in Track 2, saying that there is policy support for dispersed sites if they show themselves to be cost competitive and value for money. And then the last one is effectively the desirable outcome as far as I'm concerned, which is we need support to start those initial hubs. Government should select a couple of key dispersed sites to support, and that will justify building the hubs, building the ships, and that will in turn incentivize and allow lots of regional emitters all around the country to decarbonize. So that's the objective. So that's my sort of broad message. I'll stop there. So a lot of challenges, yes, but I think a lot of actions underway to make those come true and be ready for Track 2.
Thank you, Paul. Excellent timing. You finished ahead of time.
Need a TV.
But thank you very much for that. And I can see some questions already for you appearing in the chat, so we'll look forward to speaking to you later. If I can now introduce John Egan, who is Project Director of the Peak Cluster. John, if you could share your slides, and over to you. Thank you.
Thank you, Olivia, and good afternoon, everybody. Thanks for the opportunity to come and share this project, which I describe as an environmental and economic imperative. This project is about decarbonising the most important grouping within the country of one of our key foundation industries, the cement industry, along with lime production and energy from waste, as you'll see. It's centred in the Peak District. Not just a beautiful area, but an economically vital area. And we're going to be decarbonising that industry through CCS and transporting the CO2 by pipeline. And we will have potential to get to 2 different stores in the East Irish Sea by pipeline. One of those you'll be hearing, excuse me, from Morecambe Net Zero from Jack a little bit later on. So who's the Peak Cluster? I'm capable of moving my slides on. So we're a consortium of 6 companies. So I'm with Progressive Energy. We're leading the development of the project. You'll see on there 4 names, 4 leading producers of cement and lime in the UK. So Breedon, Lwast, Tarmac and Aggregate Industries. And then the Lostock Sustainable Energy Plant and New Build Energy from Waste in Cheshire. Okay, so we'll be capturing, transporting our CO2 for storage in the East Irish Sea. So why do I describe it as environmental and economic imperative? Well, quite simply, this grouping of those facilities of Breedon, Lwast, Tarmac and Aggregate Industries in Derbyshire and Staffordshire produce 40% of the UK's lime and cement. Cement, absolutely essential for our construction industry. Lime goes into many, many different industries and applications. So critical foundation industry. The sites employ over 1,000 people directly between them. So very, very key part of the economy locally and have been there for literally decades. However, producing cement and lime emits a lot of CO2. So well over 3 million tonnes a year of CO2, which, just to put it in scale, is around about 1/4 of the whole of Derbyshire and Staffordshire's emissions from those facilities. So very, very material. And in addition, the New Build Energy from Waste plant will emit another 600,000 tonnes a year of CO2. So this is very, very material. That's why it's an environmental imperative. But I think you can also see for the UK economy, decarbonising these facilities are an economic imperative. What's our alternative? Shut them down? Well, not going to be great for our economy and not really solve the emissions challenge. So we have to decarbonise these facilities and make them sustainable so we can have sustainable building products in this country. The chart there comes from the MPA and it may not be immediately known to everybody, but cement and lime production, the majority of the emissions, nearly 2/3, don't come from a fuel. They come from the raw material, the limestone or the chalk, the calcium carbonate that is the raw material. So there isn't a technology to avoid that emission other than capturing that CO2. We can't fuel switch the problem away. We can't electrify the problem away. So we need to capture it. So to get to carbon neutrality with cement and lime requires CCS. It is a fundamental enabler to make these processes sustainable. So what are we planning to do? The companies we're working together in consortium, and I'm looking here kind of northwestwards from the Peak District, those 5 large plants, from Hope in the north down to Calden down in Staffordshire in the south. We'll be building a buried pipeline to take the CO2 from the carbon capture plants to be built at each facility, transporting that across Cheshire, which is why we can also pick up CO2 then from the Lostock Sustainable Energy facility near Northwich, which is under construction right now. And then we will hand over that CO2 either to the Morecambe Net Zero storage system, which Jack's going to talk about in a minute, or to the Liverpool Bay CCS system, part of the HyNet project, which is clearly one of the Track 1 projects. Okay, so we have 2 options for the storage. If we're in the Track 2 process, then clearly Morecambe Net Zero will be the solution. So this is about building the carbon capture plants, pipeline to transport, and then hand over to storage so that we can get to a sustainable position for this critical industry. So our ambition is to do this by 2030. Clearly, every year that goes past, we're putting more CO2 into the atmosphere. Clearly, the costs of ETS are only going in one direction. So there's very strong reasons to move as quickly as we can. Roughly between now and then is kind of split into 2 halves. First half is largely the consenting process, nationally significant infrastructure pipeline, DCO process, and then the second half will be building the capture plants, building the pipeline. with an ambition to be in operation by 2030 and be making the production of cement and lime and energy from waste far more sustainable than it is today. So very ambitious project, very exciting project, very deliverable project. Look forward to taking some questions as we go through the webinar.
Thank you very much, John. Really interesting overview. And I will now ask and introduce our next speaker. It's Martin Curry, who is Director of Bacton Thames Net Zero Cluster. Martin, do you want to begin your screen sharing?
Thanks very much. Thanks very much, Olivia. Hello, everybody. My name's Martin Curry. I'm the Energy Transition Manager for E&I UK and a Director of Liverpool Bay CCS Limited. And you're probably more used to maybe seeing myself associated with Liverpool Bay and the HyNet CCS project. But today's discussion will be focused more on new development work we're doing to facilitate the Hewitt depleted gas field as a gas storage site. Okay, so the title is Bacton Thames Net Zero, Serving the South East and Beyond. And I was looking at the title, I was thinking, well, it's not quite infinity and beyond, but it's an important region for decarbonisation that's been a little bit overlooked in terms of the current policy of sensibly looking at the low-hanging fruit of industrial clusters that are very dense. Now we're challenged with more dispersed sites. But first of all, got to get this slide out of the way. For those of you who don't know us, E&I is a very big company. Lots of employees spread 62 countries in the world. Here in the UK, we have a relatively small footprint compared with other areas of the world. But the common factor for sure is our interest in energy transition. And you see some of the sort of highlighted targets that we have in energy transition, which actually includes CCS, which isn't listed there. But believe me, we've got specific targets in CCS. The UK is very interesting for us, really, because we see a good environment occurring with the governmental support that we're seeing in terms of the deployment of CCS. And for us, this is a very attractive place to invest. And our business is really to leverage on our existing depleted gas fields that we operate in the North in the North Sea and the Irish Sea, really to repurpose those for CCS, utilising the skill set that's appropriate and that we have, and the knowledge of the reservoirs above all. So that's a little bit about the company. What have we been doing in the CCS space? We've been getting on with it, really, in short. We've our interest is CO2 transportation storage, as I said, Liverpool Bay and Hewitt fields. And we were awarded a carbon appraisal and storage license in October 2020 for Liverpool Bay field. And really, since then, it's been the green light for our company to invest in developing Liverpool Bay site for HyNet. And that's been pretty successful to date. And we're in full steam discussing with the government finalisation of the heads of terms for the TNS business model, and really at the forefront of that activity, working together with our client partners and stakeholders. The attention that we're swinging to now is really in relation to the other side of the country, to the Hewitt depleted field. And in that respect, we made a license application to the NSTA back in September, and I can say that license application has been successful, and more of that will be seen in the public domain as time goes on. On the right hand side, a couple of pictures that I took myself, so apologies for the quality, but good to see Bacton Beach. If you haven't been there, it's well worth visit. And up on the hill is the gas terminal at Bacton, and inside the gas terminal, E&I has got a big empty space where gas processing used to be located. That's now been removed, and we've still got that property there at the gas terminal that we will and fully intend to repurpose for siting of facilities to compress and export CO2, gathered CO2, towards the Hewitt field, which is about 20 kilometers from offshore Bacton. So the slide that I really wanted to come on to, which is the meat of the presentation, is this one. And the cluster that we're talking about, because people like to talk about clusters in CCS deployment, is called BTNZ, Bacton Thames Net Zero. And this is call it a consortium. I mean, actually, the reality is it's a cooperation agreement that's been signed by 13 parties, including E&I. E&I is leading the initiative. What we're doing is to provide a transportation and storage solution for CO2, really to tap into the demand, the high level of demand for decarbonisation in the southeast area. Now, this isn't talked about a huge amount. We hear the industrial heartlands of the north, but what we have in the Thames estuary area is actually a considerable amount of existing emissions from power generation, and also from energy from waste and other sites. High density population towards the Thames estuary London area. The storage site is located up here at Bacton, offshore Bacton. In the Hewitt field. So how do we get CO2 from the points of emission, captured emission, to the storage site? Well, that's the study that's underway, and we're looking at both pipeline transportation and shipping transportation. Some very important sort of hub locations like the Isle of Grain and Great Yarmouth, feeding into our Hewitt field. And we've also been very mindful of NSTA's initiative, the Bacton Energy Hub. The idea of producing low carbon hydrogen at Bacton is very sensible, very appealing in terms of the gas supply that comes through the Bacton gas terminal. And the overall decarbonisation proposition for transporting hydrogen, low carbon hydrogen, towards London is something that many parties are finding increasingly attractive. And this is part of, let's say, the overall Bacton Thames net zero, sort of combined to look at the entire needs of the southeast. And the other sort of factor is interesting factor is the aspect of potential for CO2 imports. And if you can put your things on mute, it'd be great. Thank you very much. Is the CO2 potential movement from Belgium via interconnector, whether by a new line or existing line. The fact that this movement of gases already occurs is a precedent also for potential CO2 movement from Europe and utilisation of the UK continental shelf as a store for carbon. And that doesn't have to be the Hewitt field, but it's certainly one of the ideas that we're progressing with. And interconnector and fluxes are part of the Bacton Thames Net Zero initiative, together with the companies that you see below, plus others who aren't there. And apologies if there's anybody online from those companies that haven't got their logos there. But this is a demand-driven thing that is focused really on an area of the country that is that has been a little bit overlooked in terms of decarbonisation through CCS, and we hope that's going to change, because we've got a tremendous storage site, Hewitt, with over 300 million tonnes of capacity and potential to capture at least 18 million tonnes per year annually. That's about all I had to say for the moment. I hope I've not overpassed my time, maybe finished early.
Thank you very much, Martin. Super interesting overview, and well done, yes, for finishing for to time, if not ahead of time. We will be coming back to you later. And if I can now introduce our next speaker, Michael Foley, Low Carbon Solutions Executive at ExxonMobil and Transport and Storage Lead at the Solent Cluster. Michael, if you would like to speak and begin sharing your slides. Thank you.
Okay, great. Thank you very much, Olivia. Good afternoon, everyone. Really delighted to be able to join the conversation today, and maybe I'll start by thanking the CCSA for holding the webinar and the number of participants joining. And I will try and keep my comments to time as well, because I'm sure that the Q&A is going to be really interesting. I would say I'm also particularly excited in my role as lead of low carbon solutions for ExxonMobil for the UK. We're also members of the Scottish cluster, and I spent quite a bit of time in conversations with the Track 1 clusters. Martin mentioned about Liverpool Bay and HyNet and North East, and it is fantastic to be participating with the clusters that are emerging and presenting new and exciting and innovative ways of decarbonising other parts of the UK. And I think Martin said it particularly well about some of the overlooked areas, and John and Paul's conversations about the Peak District and the Severn Estuary as well. So I think it's great to be showing how what the UK has done and those Track 1 clusters have done and what the future looks like. And within ExxonMobil, we share the view that carbon capture and storage is just such a critical solution to reach net zero. We know that today there's about 40 million tonnes a year of CO2 stored around the world. That capacity needs to be added about every year for the next decade if we're going to get close to the 7 billion tonnes a year of storage that is predicted to be needed by 2050. So just a critical area for the world to reach net zero. And as Joe said at the very start, critical for the UK. We've made some great progress with the first licensing round and the commitments from the government, but a lot more to do. And I think these next set of clusters present some really interesting next phases for the UK. So I'll talk today about the Solent cluster. So in addition, as I said, to our participation in the Scottish cluster, similar to as Martin described for E&I, we're really taking on the lead for the Solent cluster, and sort of, the clusters do a good job at explaining where they are or what they're doing. And as I'll show you in a minute, the Solent cluster really anchored around our Fawley refinery and helping to provide a decarbonisation solution for Southampton, Portsmouth region. And as Martin made the point, quite often the south and sort of southeast of the UK overlooked, but very densely populated and needs to find some innovative solutions. And that's what we're doing with our partners in the Solent region. Today we have about 70 members who are part of the cluster, and I think that points to just how attractive and the need for decarbonisation solutions in the south and southeast is. And I would say just recognising the local enterprise partnership and the University of Southampton, who have been founding members alongside ExxonMobil. So just talking a little bit about our vision for the Solent cluster before I get on to some of the specific details. I think it's an opportunity, and we've all talked a little bit about the kind of industrial aspect of what clusters can do, and the fact that carbon capture and storage really is one of the few solutions for hard to decarbonize sectors. We know that industrial sector, commercial transportation and power generation account for about 80% of the energy derived CO2 emissions. So CCUS is really important for that. But our view is that this provides us a foundation to really help change the region, and not often recognised is many of the regions in the south have similar levelling up challenges as elsewhere. And so this is a great opportunity to bring investment to some areas where there isn't the same level of growth as elsewhere, and really use it as a foundation for the region. So looking to bring new jobs, protect existing jobs in the region, and help to cover further investment opportunities as well. And importantly for the Solent region, and I think what's interesting is how each of these clusters you start to see the uniqueness of the cluster and what they can do. And I think John's was really interesting conversation about the Peak District and the cement industries and lime industries there. The Solent has a very strong maritime industry, and is key to find solutions to help those transportation sectors decarbonise. And a large part of what the Solent cluster is doing off the back of the industrial decarbonisation is really looking at how we can help to decarbonise some of these transportation sectors as well. So talk a little bit about now the cluster itself, so getting into some more of the details. At the heart of the cluster is the Fawley refinery, which is ExxonMobil operated. The largest refinery in the UK today. It accounts for about 20% of the UK refining capacity. In addition to refined products, it also has some key important products that are used within the lubricants industry, and then also an integrated chemicals plant, and about 20 chemical products that we manufacture today that are also important for society. I think so often the decarbonisation discussion needs to be coupled with a conversation about how do we provide reliable and affordable energy during this transition period. And so opportunities like this that enable that continued supply of energy whilst also decarbonising these assets and providing lower carbon solutions is really important. So a large part of the Solent cluster is decarbonising that refinery. Refinery, important employer in the region, employs about 2,000, has about 2,000 employees today. It actually contributes to something like 2,000 supply chain companies as well. So hopefully this investment will not only help to change the region, but continue to protect those existing jobs associated with the Fawley refinery. To be able to decarbonise that area, we do need carbon capture and storage, and we are working on an opportunity for storage in the English Channel, slightly different to the sort of depleted fields that you heard Martin talk about in the southern North Sea. It's a saline aquifer opportunity, and so slightly different and diverse opportunity for starting to explore how different stores can be used. Important for us is one in close proximity, helps to really keep the cost of decarbonisation down and make it affordable. So looking at direct CO2 storage into the English Channel. As part of that, we'll be able to manufacture hydrogen at large scale. We are looking at both blue and green hydrogen, but really for the sort of scale of decarbonisation we need, the region produces about 3 to 3.5 million tonnes a year. You really need blue hydrogen, and particularly in the refinery. So looking at large-scale blue hydrogen manufacturing to help fuel switch the refinery. We'll also use that to help reduce emissions at local power stations. And then excitingly, and again, similar to Martin's comments on the Bacton Thames, really looking at how we can then supply that hydrogen into the existing gas networks and further help decarbonise the broader region, really important for that highly densely populated southeast of the UK. The nice thing about when you have CCS and you have hydrogen, what you actually have is two of the important ingredients for making sustainable fuels. And so sort of the third major project element at Fawley will be looking at manufacturing sustainable fuels, both for the aviation sector and ultimately for the marine sector as well. Important that we find solutions for those hard to decarbonise sectors. And what's advantageous about Solent is we have existing strong relationships and logistic infrastructure with both of those sectors already. We have pipelines that supply fuel to Heathrow and Gatwick, and we have close relationships with the industry in the Solent, the maritime industry, and partnerships with both of those areas looking at how we can help them to decarbonise. And then maybe the final point I'll make around solutions, and you heard Paul at the very start with 7CO2 and the importance we start to find shipping solutions for distributed or dispersed sites. Again, one of the nice things about utilising an existing refinery for CO2 storage is we have a lot of the infrastructure for shipping and transportation of many products today that we can also utilise for CO2 transportation and feed into our storage sites. So also kind of actively looking at how we can help some of those dispersed sites to reduce CO2 emissions. So it's a pretty quick stop tour of what we're doing at Fawley. I'm very happy later to take some further questions that I'm sure people will have.
Thank you very much, Michael, and another very interesting overview. I will now introduce our final speaker. So this is Jack Richards, Asset Manager, Energy Transition at the Morecambe Net Zero Cluster. And Jack's going to be talking about unleashing the UK's CCUS potential. Over to you, Jack. Thank you.
Olivia, thank you very much. Good afternoon, everyone, and thanks to the CCSA for the invite to speak to you all today, and thanks to everyone for showing up. I'm going to start by briefly introducing the organisation I represent, Spirit Energy. Spirit Energy is an upstream oil and gas company, although our portfolio is predominantly gas, as it says here on the slide, and we're the third largest gas producer in the UK. And there's really three parts to the Spirit Energy strategy. We're committed to efficiently and safely producing gas from our existing asset base. When it's appropriate to do so, we're going to liquidate our decommissioning obligations. And in parallel with winding down our upstream business, we're going to invest in the energy transition. And really for Spirit Energy, that means projects with molecules and not electrons. So projects like CCUS and hydrogen. Spirit Energy isn't a sort of brand name that people are very familiar with, but our shareholders are. So our biggest shareholder is Centrica, who are the biggest energy supplier in the UK, supplying energy to 7.5 million homes in the UK, which is the equivalent of 1 in 4 households. So big shareholders with really big commitments to net zero and delivering on the energy transition. I'm here to talk to you today about Morecambe Net Zero, our low carbon project in the East Irish Sea. And I think it's really important before talking about what we want to do in the future to talk a little bit about what we do today. So today, Morecambe Hub is a series of very large gas fields in the East Irish Sea. They're in production as we speak, supplying about 1.5% of UK gas demand. And this is a series of fields which have been in production for nearly 40 years now. At their peak through the 80s and 90s, they supplied about 10% of the UK's gas. But the Morecambe Bay gas fields are late life, they're very mature, and they'll reach an end of economic life at the end of the decade. So really the thinking for us here at Spirit is how do we repurpose this area, both the reservoirs and infrastructure and our people in support of the energy transition. So, what we really see is at the core of our future ambition is the reservoirs themselves. So the Morecambe reservoirs, some of the largest in the UK, have proven the ability to hold hydrocarbons and CO2 as well, because some of the reservoirs contain naturally occurring CO2 for millions of years. So we've real high confidence in the reservoirs, and Spirit Energy as an organisation also has a huge amount of experience and knowledge of these structures from the last 40 years of exploring for, finding, developing, producing, and in parts decommissioning. So a huge amount of know-how existing within Spirit Energy that we want to deploy to repurpose these reservoirs for carbon storage. So it's the reservoirs which sit at the heart of what we call the Morecambe Net Zero cluster. The reservoirs contain or have a storage capacity of 1 gigaton, 1,000 million tons of CO2. So they're some of the largest stores in the UK. So we're thinking deeply about how we maximise this national asset. We've just been successful in the NSTA license round. I'm really committed to making sure we bring forward projects that fully utilise this huge storage capacity. So we see a phased development of infrastructure here in Morecambe, and we're currently working on 3 different transportation routes to bring CO2 to this giant store. We're going to have an initial phase of CO2 arriving by pipeline. You heard John talk earlier about the Peak Cluster, so we're looking at how we can best serve Merseyside and the Peak Cluster with a pipeline. So there'll be a pipeline of CO2 from that region. We're also looking at bringing CO2 from dispersed sites across Cumbria via rail, similar to what Paul explained for the 7 CO2 cluster. We see rail transport as a really good option for dispersed, typically smaller emitters, and that CO2 will come into our existing gas terminal in Barrow and Furness. So there's existing rail facilities we can utilise in Barrow and Furness. And then looking a bit further down the timeline, we can see shipping of CO2 becoming a bigger part of delivering net zero in the UK and elsewhere. So we're looking at bringing shipments of CO2 into the ports of Barrow, working closely with the port owner, Associated British Ports, to then process that CO2 and send that down a repurposed natural gas pipeline, an existing pipeline from Barrow and Furness out to the offshore facilities. And if we think if we can we get this right, we can be storing circa 10 million tonnes per annum by 2030, which represents about a third of the UK government's 20 to 30 million tonnes per annum target. And then in time, we're looking at increasing the storage rate towards 25 million tonnes per annum. So yeah, a really significant store. We have a really good understanding of the subsurface and looking to deploy that to bring forward this large carbon storage project, which can serve a range of industrial customers across the Northwest and really help the UK achieve net zero. In addition to supporting the UK, we think our project is a really good opportunity to serve other countries in Europe. So we're looking at importing CO2, especially as shipping becomes part of our system. So importing CO2 from countries like the Republic of Ireland and then countries in Southern Europe who aren't blessed with the geology that the UK has. So countries like France, Spain, Portugal, that currently don't have an abundance of CO2 storage. I just have one final slide, and it's really a slide seeking to outline why we're so excited by this project. And I've done so by tying it back to three of the current government priorities. So Morecambe Net Zero is a really great project for net zero. It's a really great project for UK energy security, and it's an essential project for levelling up. So you're just on net zero. We've heard earlier in this webinar the role that CCUS will play in helping us achieve net zero. So I think we need big storage projects such as ours to be brought forward. And as I've said, it opens the door to an international market and also production of low carbon hydrogen. On energy security, we're really proud in Morecambe at the role we've played in UK energy security for the last 4 decades, and now we're looking ahead to how the energy system is going to evolve. So we think we can, we've got a good job to do continuing to supply natural gas and maximising that in the run up to end of field life, but also thinking about how we might decarbonise the remaining gas in the East Irish Sea through blue hydrogen. And then looking further out to time, if we can establish a blue hydrogen value chain, how do we create a pathway to green hydrogen? There's an abundance of offshore wind in the East Irish Sea, circa 3.5 gigawatts of offshore wind in development currently. There's opportunities for large-scale hydrogen storage in the East Irish Sea, both geostorage in depleted gas fields, but also in salt caverns. And there's also a rich nuclear industry heritage in Cumbria as well. So we've got just about every component of the UK energy system within close proximity to Morecambe. So a lot of our thinking is on how we link those ingredients together and how Morecambe evolves with time to provide low cost and decarbonised energy to the UK. And then just finally on levelling up. The Northwest, where we're based around Barrow, as a target of the levelling up agenda. We're really proud of the role we've played in local economy for the last 40 years, and this is an opportunity to bring billions of pounds of investment to Barrow and Furness and to the Northwest, and also important not just to our operation but also investment into the industrial sites that we're going to support with CO2 offtake. So with that, I'll come off my presentation, and I think we go to the Q&A. Thank you.
Thank you, Jack, and thank you to all our speakers for those really good presentations. We had quite a quick canter through, but we've had a really good overview there, I think, of a number of clusters that are developing right across the UK. I think, yeah, at this point, I'm going to ask all speakers to turn their videos on, and I think they've done that, and we will move to the Q&A. as I said at the beginning, I think we have some questions in the chat, but please do raise your hand as well, and we will come between them so that we can get some good discussion going. So I think if we start, we'll kick off with some in the chat because they're there already. Thank you, Paul. You've already responded to one, so we'll go straight to John for one on the peak cluster, where it's a question from Simon Belker saying, how do the 5 emitters plan to capture their CO2 and what's the preferred technology?
Yeah, great question, Simon. So each of our partners with their facilities are currently going through studies on what would be the right carbon capture technology. So obviously they don't all have to pick the same technology. They all have individual sites with individual process conditions, different different areas, space, utilities, and so on. So they're all going through that at the moment. Some of those are actually supported through the IETF process to work through the feasibility studies. What they will all have to do is meet a common specification for CO2 to go into the transport system and then ultimately into the storage system. But yeah, process going on of selecting technologies, and then obviously that would move forward into design and so on.
Okay, thanks, John. And if, as I ask questions, if you want to, if you've posed a question in chat and you want to come in on that, please just turn your camera on and we can come up to you with any follow-up questions. I'll carry on moving through. So the next one is from Gillian White. And this is for you, Martin. How many employees does E&I have in renewables and CCUS? But also, I think there it might be useful if you can elaborate and sort of tell us a bit more about the how important is legacy oil and gas industry experience to building the CCS industry of the future?
It's a really good question because I don't know the answer. and I know my colleague Keris has been sort of on the line, sort of trying to dig out some numbers for you. So we can't be precise, but what we can say is it's a growing number. Just on CCS alone, we've got 3 active projects and all that entails in terms of our own sort of resourcing. We've got Liverpool Bay CCS project that's serving the Northwest HyNet cluster in an advanced stage of feed. So we'll be looking for sort of a final investment decision for that project next year, but that's another big story. We have a project team working on the Hewitt storage facility and all the work program that's associated with that will be associated with the carbon storage license, as well as the transportation business that's associated with that. So that is an active project that E&I are resourcing. In addition to that, there's we have within E&I a substantial number of people also working on a CCS project in the Mediterranean, the Adriatic, the Ravenna CCS project, and there are numerous other sort of ongoing work in CCS worldwide. Wind and renewables, we've got entire sort of company devoted to that, but I'm not sure of the exact number of people in that. It's a growing number. In answer to your question, it's a growing number. We're an industry in transition, so it's the industry of the future. There was a follow-up question in relation to the skill set of oil and gas. Completely critical. It is oil and gas companies that will and are leading offshore storage, development of offshore storage sites. Technology is pretty similar. You drill wells, you inject gas, you transport gas, but via pipeline. Okay, it's CO2. It's a different fluid which offers certain unique challenges. But the skill set is absolutely fundamental, and we're very fortunate to as oil and gas companies, or energy companies as we like to be known, to have assets that we are very familiar with, that we've explored, that we've developed, that we have confidence in through their performance. We model them, we apply all of this decades of experience and thousands and millions of man hours. So it's essential, and we hope that our type of company will continue to be incentivized to continue to be the active first developers. It may not be oil and gas companies that become TNSCOs, transportation storage companies will exist in their own right, but the starting point is very much helped by the oil and gas experiences.
Thanks very much, Martin. The next one is to any of you, so either a volunteer or a pick on somebody, perhaps Paul. But is the falling price of UK carbon allowances in absolute terms and relative to the EU ETS a concern for CCUS viability in this country? Paul, do you want to start off, and others can come in if they want to?
I can start. I mean, I'm taking that, Paul, as a sort of general reference to carbon price more generally. I mean, basically, yes, a lot of what's going on in investment in CCS, the rationale of it will be the growing carbon price, which incentivizes changes. So let's just give a simple example. CCS for energy from waste, maybe let's say it's 150 quid a tonne. If they do CCS, they will avoid the carbon tax on their plastic element of their waste, the anthropogenic, so a carbon tax of 150 quid a tonne. And they could get negative emissions for the other half at 150 quid a tonne. So if the price is high, the CFD that you're looking from government is almost free to government, because this element the private sector pays for. If the price is low, you're asking for a lot of subsidy from government inherent in their contracts. So we do need a fairly decent carbon price will effectively stimulate more investment and make it more affordable for government to support the industry. On the downside, if you're an industrial, you're saying, hang on, if I'm paying a large carbon price, I do want to make sure that's an international carbon price, otherwise it's making us uncompetitive. That's outside the remit of CCS, but in carbon pricing, government does have to worry about cross-border pricing and what that means for industrial competitive. But that's a wider and a longer debate for a whole webinar.
Thanks, Paul. Does anyone want to come back on that, or Paul Hallas, the person who posed the question? Is there anything anyone wants to add?
Can I add one comment, Olivia? With ExxonMobil, maybe a bit of an international lens on it as a US company. I think what's going to be interesting is, UK and Europe with its mature emissions trading scheme and that kind of cost of CO2, with a kind of mature policy set which provides an incentive for investment around the business models it's developed. It's kind of one approach. In the US, we're seeing a very different approach, which is a lot of incentive, not much penalty for CO2 emissions. I think it's going to be, there's a bit of a race on and a bit of a comparison of how those different approaches are going to play out. So I think it's going to be interesting to see how that matures. And clearly what you're seeing is the current approach in the UK from the participants today. It seems to be encouraging companies to look at the opportunities here and consider investment.
Thanks, Michael. Yeah, and I think it's important context to say that we're now in a global race here. There are things happening in the US and in Europe, and things are really starting to accelerate. Amir, I noticed you had your hand up earlier, so if you want to come on camera and ask, but another one for you, Martin. What are ENI's? Oh, Amir, you go ahead.
Thank you for your nice presentation. My question is to Annie. I'm just from E.ON, and my question was, so basically you have plenty of storage in UK, and somehow you are dominated a storage provider so far that I can see in the UK. Is it in future, do you think that it would be a liquid market in UK for a storage fee, or would be more regulated from the government's perspective? And the second question would be, what do you think about the cross-border CO2 transport? It is also a question maybe relevant for North Sea Transition Authority. And how do you see the cross-border CO2 transport or storage? Is UK strategy also following that other emitters in Europe definitely can import or export a CO2 from other country to CO2 to the UK?
Wow, there's a lot there, Amir. Let me have a start. First of all, we've been fortunate to potentially have have a couple of CCS projects that are really live. It comes at some risk to us. We have invested a lot, and some historic risk, and that's been through our company's determination really to get involved and to be a leader. It's a deliberate strategy, but nobody has injected any CO2 offshore in the UK, so I wouldn't say that anybody is in a dominant position as yet. Let's get started and see how things develop. It's the getting started that is the absolute critical thing, and our company is really keen to work with its user base and stakeholders to do exactly that. You asked about regulation, the future market, whether there's opportunities for others. I really hope so. At the moment, the TNS side of the business it's been determined by the government that it should be under a regulated model because of essentially the fact that you might have a sort of proxy monopoly in the situation in terms of developing a sort of regional network. I think things will develop. Let's get things started. Let's get things off to the races. There is plenty. I think the government's expansion deployment plan, I think, will evolve. I think they're probably thinking very hard about the future right now and what the right drivers are and incentives to get the level of investment and at the same time get the value for money that they're looking at. And in that case, it will, I think this is why they've gone down the track of having competitive processes which are time consuming but careful, in terms of determining an outcome that the government could sort of audit as being value for money and fair. So I don't know exactly what the future will bring in the longer term, but we're just keen to get it off to the races, and we hope that some exciting new announcements for all people interested in investing in CCS. We see NSTA have awarded so many different licenses to so many different parties. All of these people are going to be interested in turning that license into a business, and so it just shows the level of demand that there is in the UK. You asked about cross-border trade of CO2. Let's hope this develops, because politically and economically this is really interesting. UK has so much storage capacity, and it's close. I don't want the CO2 to go to Norway. Why should it go to Norway? Come to the UK. It's closer. It'll be cheaper. And we're available. We're on standby, to develop Hewitt not only for UK carbon, but for the interests of the UK generally and Europe and decarbonisation. So interesting times.
Thanks, Martin. I can see Paul and Joe both want to come in on this one as well.
Shall I go first? Simply on that, it's the analogy here would be with the airline industry. So at airports, there's a regulated and a non-regulated aspect. There's the airline aviation fees, and there's duty free. And I can see an evolution on a similar basis. As Martin says, if you've got static stores to static clusters, that feels like a rather monopolistic position, which a degree of regulation protects. Once you open up shipping, you've got imports and you've got ability to go to between stores, competition will take over. So you may find that the regulatory element of the overall revenues of these stores will become smaller, and shipping will enable a much more competitive and what's called dual till approach to the structure in the future.
Thanks, Paul. And it's certainly something the CCSA has been pushing. If there is sufficient competition in the market, then that should suffice. Joe.
Yeah, I mean, I think just to kind of build on some of those points, I wouldn't sort of disagree with any of those. I think there's definitely enough appetite and need as well for, ultimately the I guess the sort of business models to move away from a more regulated asset base in time. As Martin says, I think some of these, we need to sort of get the early projects up and running to demonstrate some of the proof of concept of storage in some of these sort of depleted fields and also the saline aquifers. So it's around understanding the diversity of the storage across the UK as well. So, but I do think, I think from the early charts that we were showing earlier on in the presentation, whilst we have a very keen focus on meeting the domestic demands from a UK perspective, that there is, I guess from our perspective, there is sufficient capacity on the UK shelf to welcome imports over time. I think it's just around understanding the storage, where are the most viable stores, and obviously some of those are going to be away from, sort of domestic, emissions that are easily piped to stores. So there'll be an overall need, I think, for domestic shipping shipping in time.
Thanks. I don't know if Jack or Michael, you want to come in on any of that, but we will be coming to you on further questions. So I'll come to you next, Michael, anyway, and if you want to respond. So the next question, have ExxonMobil identified a geological CO2 storage site for the Solent cluster? And if I add another one on as well, which is sort of 2 down, but saying with the English Channel being one of the busiest shipping lanes in the world, what are the perceived challenges to developing a storage site and MMV?
Yeah, no, two great questions. And I think I'd kind of come back to a point Martin made and sort of and Joe's point about cross-border shipping. I think ultimately we need to find lowest cost solutions here, whether the emissions come from UK or Europe. Society needs lower cost, and what we're seeing is, good stores in close proximity are probably the best options we've got for those lowest cost solutions to decarbonize. So look, we mentioned earlier, we do see a opportunity for an offshore CO2 storage location in the English Channel, working with NSTA, Joe, and many other stakeholders about how can we potentially progress that and do the necessary evaluation and technical work. I think it's interesting because it provides, sort of, again, diversity of options for us, both sort of regionally and in terms of where the geographic location is, but different to some of the depleted fields. So actively working that. It does come with some challenges. I think the recognition that the English Channel is a very heavily used location for the marine sector is an important one to consider. And we're sort of looking at innovative solutions to that. I think pulling on some of our experience from the oil and gas industry Martin talked to, on how we've done subsea developments in complex environments before, and that we're kind of used to this sort of environment, is again what large energy companies can do. But it's also important, and Joe may comment on this, what we're having to do is talk to new and different stakeholders in ways we've not done before. Now, a lot of what we're doing is talking, how do we do wind development on top of CCS, and how do all of these stakeholders come together? And I think that's a new and exciting challenge for the industry.
Thanks, Michael. I will move on to Jonathan Oxley's question, and perhaps come to you, John Egan, for this one. Do the panelists have any thoughts about how to balance sizing initial pipeline capacity to support a cluster whilst thinking of the headroom that might be required as the footprint of a cluster expands beyond initial users? So how do we allow for future growth, and how does that fit in the sort of regulatory framework?
Yeah, it's a really great question, Jonathan. Funnily enough, it's the second time I've been asked it within the last 24 hours in different forums. Yeah, I think there's always an element of tension when building particularly large-scale infrastructure such as pipelines. How much do we try and keep the cost to the absolute minimum by doing the least for today? How much do we allow for future so we don't have to go back and build more infrastructure, reinforce that infrastructure in the future? And of course, there's no single answer to that question. Yeah, if I look at it through the lens of what we're doing on peak cluster, I think we know very well where potential future sources of captured CO2 could be, and in an area like that, the answer is very, very few. In fact, you know, I met with one on Friday afternoon exploring that kind of thing. You know, where are those other sites that might potentially connect in? You know, and I think one of the great things actually we have in the UK is real visibility. You know, that we have an open database, the ETS. We know where the big sources of CO2 are. We know, you know, industrial sites are quite hard to hide typically. So the information is reasonably accessible. Clearly, future developments can happen. But I think we also have to be careful of designing for the, you know, for the unknown unknowns of the future. So I think the answer is each project has to look very, very carefully at both its core emission sources, potential growth and expansion of those, potential add-ons, and then come to a sensible judgment. And then I guess kind of the, you know, the last piece is what are the variables that one has, and kind of pipes actually come in standard sizes. So you're typically making a choice of which line size do you go for, and then, you know, intermediate compression. So you kind of fairly quickly into some significant technical choices. Yeah.
Thanks, John. And Jack, do you want to come in on this one?
Yeah, maybe I can just, you know, add to John's points with the perspective of a TNSCo. So, you know, for us, we will be injecting CO2 in the gas phase initially because we're injecting into a depleted natural gas reservoir. So for us, it makes sense to transport gas also, or transport CO2 also in the gas phase. But in time, as the reservoirs repressurize, we'll move to injecting in the dense phase, and then it may be appropriate to also transport CO2 in dense phase to achieve higher rates. So one of the thought processes that's ongoing with us is if you're building a pipeline, can you make that dense phase ready so that it can have the specification to tolerate dense phase, but you use it only for gas phase initially, and then it can scale with time. So, you know, just a bit of detail around the different phases, and we have to think in kind of multi-decades here as we put this infrastructure in place.
Thanks. And Paul?
Just to add, in my view, and I put it slightly in my presentation, this is the fundamental role of government. In government, ultimately, you've got to look at market failures. It's impossible for any one organisation to build something massively oversized for its own needs, and very hard to get market to collaborate. In fact, it might be seen as anti-competitive if we did. The key thing for government is to invest in those bits of infrastructure at a scale which encourages us, incentivizes us, and removes the barriers to invest in CCS thereafter. So if I were doing policy, I would focus very much on ensuring you've enabled decent sized pipelines, ensuring hubs have been enabled, not necessarily 57 projects feeding into each cluster or into each hub, but make sure that oversized, if that's the wrong word, but, you know, right-sized pipes and hubs are in place. And in some ways, if that's done in this decade, the next decade, the industry will do a lot of it without government. So that's a fundamental role that we should be doing, and we should be doing it with ambition.
Thanks. Just a reminder that if you want to ask a question as well, please just put your hand up and I'll come to you and you can ask it yourself. The one on rail here. So somebody said, I think rail shipping of CO2 is really exciting, but already the infrastructure has various choke points as the system creaks. Have Network Rail been consulted about where such pinch points might impede the transport of CO2? I don't know who wants to come back on this one. Do we have any volunteers? Paul?
I should do. Sorry, it's me talking again. But just because we're doing the study on it, we're working with GB Rail Freight, who are the people that move stuff around. The general assumption is there are pinch points and will continue to be pinch points, but that just makes it rational to rail on a regional basis. So, you know, if you're in the southwest, would you rail it to Endurance at Teesside? Well, probably not. Crossing London, crossing the main thoroughfare, it will be cheaper. You've got to liquefy to put it onto trains. At that point, if it's already in liquid form, it could go onto ships. So regional movement rather than big transnational right across the country. It's probably cheaper just to do it regionally and to maybe to shipping or to your regional local cluster. So, you know, with Martin, rail it up to Bacton, to us, do it down to Avonmouth. That's more likely to happen. And it's just a question of economics and timing. But if you think about it, for a an average energy from waste plant, for instance, and there are 50 of those in the UK, maybe 300,000 tonnes a year. that's 1,000 tons a day they've got to rail somewhere. If they're all doing that, you can imagine what that would mean in capacity. It has to be a regional solution.
Thanks. And Jack?
Yeah, I was going to make a similar point, really, that I think it needs to be looked at on a case-by-case basis. So for the specific emitters that we're working with in Cumbria, we've looked, as you might expect, at the rail network locally to us between the emitter and Barrow, and there is capacity there. But as a national solution for moving CO2 over longer distances, it probably makes less sense. So I think it does need that regional approach. And as Paul said, it's probably for the small to kind of mid-size emitters that rail makes sense, not for the very large emitters.
Thank you. I'm going to do one to all of you now, which covers, will hopefully sweep up a few points. So the question for all the panelists of what are the key regulatory and/or technology hurdles to delivery of these projects, but also what is, I know I can't find it, but what is the one key thing that you need to be put in place to accelerate delivery? I will go to Jack first.
Yeah, I think most people on the call would probably mention track 2 in responding to a question like that. So let's get that out the way first. So there's a lot of interest in track 2. I know several companies, including ourselves, have put forward an expression of interest to participate in track 2. And much to our frustration, there's a lack of clarity on the timetable and even the kind of broad plan for track 2. So I think as an industry, we're continuing to invest, continuing to drive forward these large and complicated projects without a great deal of clarity on when the next phase of cluster sequencing will come and what that will look like. So I think clarity on the process for track 2 and whatever may follow would be the one ask from a Spirit Energy perspective.
Thank you. And any significant regulatory barriers?
I'm not sure about barriers. Certainly a lot of detail needs to be added to the regulatory framework. But I don't see those as barriers. I just see that as the work that has to get done. So I think industry's already doing a great job working with government on regulation, and that will continue. Thankfully for us, there's other companies breaking a lot of new ground here, and will likely be a fast follower as opposed to being the ones putting in place all the regulation and policy for the first time. But I think lots of great work in progress, and we just need to continue with that.
Thank you.
Yeah, Jack, we're sort of breaking that ground, and there are no regulatory hurdles. There's just an awful lot of hurdles, really. The number of regulators is, I guess, at least as much as we deal with in the oil and gas business and more. And planning and consenting, permitting onshore is the sort of added volume that the TNESCO certainly deals with. And what we find with regulators, apart from the NSTA, of course, Joe, and the NSTA, a wonderful regulator who we're on excellent terms with, and they're doing a great job. But a lot of the regulators, and I won't name names, but essentially they're trying to shoehorn what they do at the moment into a new environment of CO2, and sometimes that's sort of challenging, and it does mean that each regulator needs to sort of consider his situation and how he needs to evolve his existing systems, or adopt his existing systems specifically for CO2, and that's a challenge for each regulator. And the consequence is that things can go a little bit slowly, but they're developing, and we hope that certainly won't be any specific hurdle in itself, but it's a new industry that we all have to recognise.
Thanks, Martin. I'll come to you next, Michael, if you can briefly say regulatory hurdles and one thing you would need to be put in place to accelerate your project.
Yep, I think 2 good points. I'd probably echo Martin's comment on the hurdles. I think the permitting is one that we need to ways to move faster on. I think that's kind of a little bit to Paul's comment about the government needing to take a look at where there's sort of strategically important investments and how can they help fast track, and some of that kind of came up in the CCC report recently on the status. I'd maybe take Jack's comment on the one thing we could ask for. You know, he mentioned track 2. I'd say that I think it's not just track 2, but it's all, sort of what is that longer term deployment plan of policy. I think that's important for all us to have a view of when we might be investing, and that then comes back to the question about how are we right sizing, how are we thinking about what the needs could be for the clusters. I think it's having that longer term view of how will policy be deployed is important. Thank you.
And John?
Yeah, certainly I would agree. I don't see particular regulatory hurdles. We do need to try and simplify process. I think everyone said that. In terms of investment, it's clear. It's about certainty. I would absolutely echo. Everyone wants track 2, which means everyone wants to be in track 2, and government's been quite clear. There's 2 clusters from track 1, and there'll be 2 more by 2030. And I think that's kind of, whilst we'd all like to get on and be in track 2, the reality is we can't all be, and this is somewhat speaking to, I think, another question that was asked in the chat about what happens to those who don't. It's a black hole at the moment. I think we all know that ambition by kind of any of the different measures is to ramp up post 2030. But these big cluster projects, these big linear assets, they take 7 to 10 years to develop. So we're 7 years out from that deadline. So that means that we need clarity of what comes not just for 2030, but beyond 2030, so that we can be planning sensibly. And this process of a cliff edge that everyone faces with these binary competitions is really not very helpful for developing large complex projects.
Thank you. And Paul?
Yeah, I'd just echo the track 2. Just basically, let's get clarity and hopefully get it as wide as possible, because encouraging clusters, dispersed sites, shipping, that should all be in there. We may not get selected, but let's all get excited and start putting bids together. You know, so as wide as possible to encourage that, and that does mean some work in government endorsing the suggestions we've made on the legal structure needed for shipping and for hubs and for storage without pipeline. So just a real focus to make sure that that's encouraged. If those projects are chosen, are shortlisted, we've then got another sort of 18 months during that feed process to make sure those contractual structures work, but make it as wide as possible.
Thank you. There is a question on that we've heard from 5 clusters today, but as things stand, only 2 will be selected as part of that of track 2. So where does that leave others? And I think, in short, we don't know at the moment. So the government has committed to 4 clusters, and beyond that, I think this is where it's absolutely critical that we talk about the longer term rollout of CCUS, and that we know that we need all the clusters, and we know we need them all to move forward. So what is the route to doing that, and the route to a competitive market there? Michael?
Yeah, I was going to add, I know we're running out of time. You know, Martin alluded to this earlier about other opportunities E&I are looking at in the Mediterranean. I think the reality is many of us are global companies, and without that certainty, given the landscape is becoming more competitive and policy and other opportunities exist elsewhere, we run the risk of that investment not coming to the UK.
Yep, definitely. Joe, I hadn't come to you because you'd frozen, but you are back. I did want to acknowledge the question at the end, the assembled group of speakers, does it reflect diversity and inclusion and CCS achieving the acceleration we so clearly needs all hands on deck and new ways of doing things? I can say, I mean, we're running out of time at the moment, but we did have a paper presented at the CCUS Council last week on skills and addressing diversity and inclusion across the sector is paramount there, and one of the recommendations, and I think runs right across the energy sector. But not necessarily on that, Joe, but because you've been frozen for a while, was there anything you wanted to come back on any of the points raised?
Yeah, I think you know, in addition to the getting certainty on the commercial aspects and the business models, you know, there are, you know, a number of sort of technical aspects that we need to, you know, hopefully start to better understand as the the early projects kind of come through to the operational part of their lives, I think that's also going to help de-risk and sort of get more confidence behind the overall deployment of CCS in the UK, I think. So again, in addition to sort of the commercial uncertainties, there are some sort of technical areas which only through deploying and by doing and getting and learning from those operational projects, those will be the things that also kind of help us get that sort of the power behind CCS for the long term for the UK and looking ahead to sort of potentially for international imports as well.
Yep, no, definitely. I'm going to have to wrap it up there. We've reached 3:30 and we haven't got through all the questions, but thank you ever so much to all our speakers and the whole panel for their presentations and responding to all those questions. Thank you very much to all the participants for all your questions. We will endeavour to answer the questions and circulate them as well and put them on our website along with the slides and recording, just to make sure that everyone gets responses to those. And thank you very much. Do keep in touch. We will post future events and webinars on our website. So thank you to all. Thanks very much.
Thanks for listening.
Thank you. Bye-bye.
Thank you.
Bye-bye.
Bye.